Can you get a business loan with bad credit? And the answer is, hi, this is Michael from Viral Funding Solutions, and I'm going to get right into it. The answer is yes, absolutely you can, but at the same time, you cannot. So I'm going to get right into why that is the case. Now, you can get in with a bad credit score of at least 450 and above, and that's very minimal. And that is beyond insane in some cases because most lenders nowadays, a 500 and even a 550 and above is generally what they're looking at, and the market always changes. But just know that you can get in with bad credit, don't have to put any kind of collateral, no hard credit checks, and get this, even no interest rates. That is right. And I'll leave more information on that, how you can with a certain program and lenders down below in the description. But before you go anywhere, I do want to get into a little bit more detail. So on this fact that 450 and above is going to be part of that process, what you have to understand too is what that entails, okay? 450, but what is the catch? The thing is, if you're in a bad credit score level, you are considered high risk, and in a lot of cases, very high risk. Anything underneath 550, 450, in between there, it can be considered even higher risk, okay? And so what you have to get is, yes, we can approve you for 500 and above, but we also have to look at revenue. If we accept people and business owners with a lower credit score, well, something else has to give. We have to look at the revenue that you're doing. So in an example, if you were doing just let's say 7,000 a month, and it's like up and down, 6,000 here, 8,000 there, and you have a 480 FICO, that may be a little bit more difficult because of revenue isn't as strong, but it's just flopping here and there. The time in business isn't where it needs to be, and a few other things that it may get you denied. And reason being is lenders don't want to deal with profiles a lot of the time that are underneath the 550, depending on how much revenue you have. So I'll come back a bit. At a 550, is generally a good sign. 500 and above is great too if you're doing 15,000 and above, 20,000 and above in monthly revenue on average as well. Because a lot of the times anything underneath that is hard. So unless you're doing 500 and above, 15,000 plus per month or 20,000 plus per monthly revenue, then we won't like really deny that because we know the revenue is strong enough and there are some other details to look at. But if you're in that other situation where it isn't and you're just head above waters, and it's just like up and down, a very bad credit score underneath 550, we can still consider it. It just depends from profile to profile. And the reason being lenders have pushed away from that is because they don't want to deal with people who end up in collections. They hear it all the time. Over half of the time people do, they want to deferment. I get it all the time. I couldn't work and this happened and this, you're liable. And a lot of the times, if you haven't even built a relationship with the lender, and even if you have, they won't always give you that option. So just keep that on the back of your mind. So yes, you can get in realistically with a 450, 500, 550 and above, but what you're sacrificing, you have to ask why, okay, what's going to happen with my terms and rates? So a lot of the times your credit score has a direct correlation with the terms you get. And there are some other things in there, perhaps the rates, but not as entirely. So if you were to have like a 550 FICO, 580, just below 600, you should not expect to get long terms. Let's just be honest. You can have strong revenue and say, well, I deserve longer terms because I have this revenue at this time of business. Come on. Sure, that helps. We're looking at it as, okay, you have a year's plus worth. You have at least 15,000. Maybe we can get you 20,000. We can get you at least 7 to 11 months. But anything under that or so forth in the 500, just below 600s, it's hard. And it's going to get you about 6 months in most cases. And the rate you're getting, perhaps revenue is strong, maybe time in business is, but credit score isn't, so you're going to get a higher rate. So if we factored in a 1.19 to a 1.49 or a 1.69, depending on the risk we're taking, you'll get maybe closer to the highest amount because of that. But if your credit score just came up to 600, 605, 10, and your revenue was just strong enough and it was in the category that we look at and say, yeah, we can give them 7 to 11 months, not 12 to 24 or so. If we do 4 to 24 months, we can't get you 12 to 24 months there yet. But if you brought the credit score up to a 700 and above, and you're doing 50,000 plus per month in annual sale in sales, and then you had like 2+ years in business, then perhaps we can look at getting you a rate between a 1.19 to a 1.30. Everything else outside of that, 1.30 to 1.49. So we have to assess the risk. Your payment history doesn't show it. It's not sufficient. Debt to income ratio, utilization, inquiries, et cetera, et cetera. That stuff will hurt you. So the more that you have, the harder it is for us to even give you the amount you want, even if revenue is strong enough. And in a lot of cases, you won't get, the minimum is usually 10 to 15% of your annual gross sales. And in some companies, what we look at too is we can get you between 75% to 200%, just depending on the service. So even if you have strong enough revenue and you wanted the most, it doesn't always tend to come out that way because your business's credit scores doesn't show enough sufficient history of you making payments on time, late payments, not any payments at all, and so forth. There's not enough history for us to determine if you even pay your bills on time and if you will be able to give us the money back. So there are a lot of consequences you have to look at. So what I recommend to people is that they fix their credit score, their FICO, they build their business credit, and all this information I'll leave for you down below in the description. So if you're looking to fix your credit score, your FICO, I strongly recommend you do getting it outside of the 500s. But if you can't, if you're in a position where you're like, I'm hitting a hard season, or I'm hitting a season where this is going to increase our profits, or we need the money, then by all means, if the benefit exceeds the repayment and it won't hurt your cash flow, it won't keep you debt under, and it'll keep you stable instead, and it'll increase your profits, then by all means go for it. And I have a lot of people who do that every single day, just about every day. And they don't have sufficient revenue, FICO credit score, they have the revenue. We can get them just about what they were asking for. If not, we can try to get you this and then start there and then come back, refinance, get you more. That's how it works. And so if you have bad credit, again, just be understanding that there are underwriting guidelines to this. And just because you have another loan, I've had a lot of people say this, but I have a loan over here. I have one or two positions, however many, one, let's say that. They go, well, I have a business loan over here that's already a short term. I need looking for something with longer. That just doesn't work. Get that out of your mind. The thing is, and that's not just to be rude or anything. I'm not like that. But I have people who go, well, I need a longer term. I got 6 months here. No, well, the thing is we have to look at is why you're getting that amount of time. Was possibly your credit history, is possibly this part, and you already have a loan here for 20,000. We're not going to get you more than that. It's going to cause a reduction, perhaps 15,000 or less, more or less 10, 12, 8. But to be upset that because you're paying something with a higher rate is not the answer. It's not even the term in a lot of cases. It can be, but it's about your repayment. If you look at the repayment at the end of the day and you say, well, I'm only getting a daily payment, I can't get a month, I don't want these types of daily payments. Well, fix your credit history. Let's pick up your revenue. Let's pick up your funding details. It's all about your financials at the end of the day. And it also has to make sense what the use of your funds are for. And if you're going to qualify and so forth. And just because you qualify for something doesn't mean it's the best thing. And so you have to understand, what do I qualify for? And what is my actual funding details telling me? And this is why you keep running in the same situation, because you're fixing the symptoms, not the actual diagnosis. You're not even fixing the symptoms. So a lot of people still come back to me and they go, well, I'm still in the same position because you didn't take what I asked of you or what I sent to you. You didn't take that to heart. You didn't work on it. And so they're back in the same position they were in a year ago, in the same position they were months and days and even weeks. I kid you not. But that's what you can do. You can get a business loan if you have bad credit. I have other videos that I'll link to that down below in the description, as well as a questionnaire form so you can get a more personalized and customized response on your best funding option and options, very thoroughly broken down. And you also get a 6-step pre-approval lending checklist so you understand what you must know before you walk into an application with 110% confidence and certainty that you will get approved without wasting time. We're talking about days, weeks, months, and even years of sifting through old, outdated, scammy type of information that just doesn't work, theory and fluff based. I have everything that's up to date that will work for you. So the questionnaire form will be down below and you get that free 6-step pre-approval lending checklist with it. So make sure to fill that out very thoroughly. Take the time to go through it. It is a questionnaire, not an application. So it's confidential between you and I will analyze, evaluate it when it comes into my email, and I'll respond back to it via email. So look out for that when it's ready. And I'll show you where to go from there. Maybe give you some pointers if you want to fix your credit. Here's a video on that, or here's some content on that. Building business credit is what I recommend. So this is what you should do, is a free video series down below this. And all programs and what you should do, understand what the requirements are. But at the end of the day, just to recap, there are underwriting guidelines to it. Understand the products and services. Understand what these lenders are looking for. Understand that yes, you can get approved, but there are limitations to it. Also with the terms, the amount of funding you can get offered. And there are specific industry guidelines and specific industry requirements and qualifications you must meet. And in some cases, not in all, but to know that there is funding out there available. Just understand the repercussions if you take it, how it's going to be used, and don't put yourself in a pickle in a situation where you can't pay it. Maybe a lump sum doesn't make sense for you because it'll hurt your cash flow. Perhaps a line of credit will, and you meet the standards for it, and we can try to look for that. But until then, just keep educating yourself with my content. If you haven't in the past, I come out with content on all of this. And make sure to pick up my free resources down below. If you have not yet subscribed, please go ahead and do so and click that bell notification icon, please, so you do not miss any future videos I come out with. If you found value in this video, please, yes, give it a thumbs up and share this with others who you feel will benefit of this. And for any other questions, comments, or concerns, please voice them to me down below in the description, in the comment section, and everything else you need to know will be in the description. That is everything from me. Take care. Talk to you soon.